In this video, I'm going to talk about what I think is the easiest way to become a millionaire. Now, I've started on this path a year ago. I'm not there yet because it's a long-term approach in order to do it. It's not as exciting as building some mega business or becoming a rapper and getting your $1 million within 5 years. Not many of us have that opportunity, so this is one way where the average person can become it. And if you don't know anything about ETFs or index funds or investing, then you definitely need to watch this all the way through to make sure you understand how to go about it, because it's really easy. Time is key, so it's best to start now. So you may have heard the term, the secret to building wealth, or somewhere along the lines of this. The secret to building wealth is to act like you earn less than you do. It sounds great, right? If you act like you only earn $40,000, but you earn $50,000, well then you're gonna have $10,000 left over there at the end of the year, every year, and sit it there in the bank. Sounds great. But what that actually means in more detail is to invest that. So if you act like you earn less than you do, you don't want money sitting in your bank. You want your money to be working for you as much as you work for your money. So if you don't know anything about compound interest, which is the real secret to building wealth, I think Einstein, I don't know if it's official, one of his writings or anything, but I've heard many a time that he said compound interest is one of the wonders of the world. Probably, I think it was the 8th wonder of the world or the 5th. Whatever it may be. I don't know if it's official, but it does go to show that along the lines there was some respect, some attention given to how powerful compound interest is. I think it's one of the greatest things about society and how you can build up your wealth, because it's just so powerful to watch unfold. So we'll jump on the computer and quickly have a look at what compound interest is, in case you're unsure. Okay, we're going to demonstrate here the most subpar Excel skills you ever will see. I've never had any instruction on how to use it. I've just tried to teach myself. So I don't know any of the commands or anything, but it works well to explain some things. So if you got $1,000 and you can owe $1,000 or have invested $1,000. So interest can work against you heavily or for you really greatly as well. So for instance, you got credit card debt, they're going to charge you 20% of that every year on top of, and just keep hitting you, right? So you want it to actually be the opposite. So if you were to invest, let's say this is your new amount, okay? We're going to be getting 10% return, and that number's not pulled out of anywhere. I'll show you shortly on Google. Actually, we can do it right now. So this number here, the 9.8%, is the average annualized total return for the S&P 500 over the last 90 years. So this is tried and tested. 90 years, a long time, so you can always start now and reap the benefits, okay? So the only way that the S&P 500 could really die is if America, because it holds most of the 500, if not all of them. I think it might be a completely, either way. If America sunk to the bottom of the ocean, then look, your stocks are probably going to crash because most of the big companies were there and have to rebuild from the ground up again if they ever do. So when people say like, you know, you can't, that's not a representation of how the future will unfold. Yeah, sure, you don't know exactly how it's going to go, but generally, share prices will grow over the long term from inflation, things like that. So you don't want to sit money in your bank, pretty much. You want to invest it because then it can grow up. So enough of that. Here we go. 10% annual return. To keep it simple, you start with $1,000 and you add nothing else. Okay, you put $1,000 in, and without the stock growing or anything, if you were to get 10% annual return, as that said, it has done over the last 90 years, this would be your new amount. Okay, so we'll get the calculator up so you can watch me do it one by one. And you can do this on the internet a lot quicker, but for anyone that doesn't really understand compound interest, because once you understand it, you're like, wow, that's powerful. I need to do something with it. And yeah, that's exactly right. So 1,000, and if you times that by 1.1, that will add the new 10%. Okay, because 0.1, 0.2, 0.3, 0.4, 0.5, up to 1.0 would make 10% increases, right? So 1.1, that would be your new fund. So to get the actual amount that it just increased by, you just times it by the 0.1. So we went up $100. Okay, so great, you made $100. Now some people get the idea that you just make $100 per year, but compounding interest is so powerful because it doesn't give you just the 100 now. It gives you 10% of the new larger sum that you've got. So now we've got 1,100 times a 1.1. Bang, now we've just made 110. Okay, so now we're at 1 to 10. Okay, let's get 10% of that times by 1.1. Bang, 1131. So you haven't added anything, right? And it did take 3 years because 10% annual, but you've made $330 by just sitting your $1,000 there. Okay, and whether or not you're a casual worker, part-time, people can find some type of money to invest. Now, a lot of people will probably hear that and go, look, I can't. I've got credit card debt, car debt, house going under, nearly losing my job, I don't have a job. All these things, right? Everyone comes from a different place. When I was at university trying to study mechanical engineering, didn't have a job. The government, not that you should ever look for someone to help you, but they wouldn't give me any help because I was under 25. My parents had just screwed themselves with debt, which is why I'm on such an endeavor to never ever let myself be in that position like they were. So it taught me a lot of good things. That's why I'm so involved and so confident in these index funds and stuff like that and compounding interest. So I want everyone else to understand the power of it. But I had $1.37 in my account and had to look around what I could buy for the next 3 days to eat at home. Okay, so you can find a way to get there no matter what position you're in. If you're casual, you've got a couple debts, okay, or whatever it is, income, you've got debts, you want to line them up from smallest to largest and knock them out. Or line them up from which ones have the most hurtful interest rate on them and just get rid of them, okay? That's your first objective, and then you start investing, right? 1,331, and it goes on and on. Times on 1.1 again, 1,400. And watch, as it gets bigger, the interest becomes bigger. The compounding return becomes bigger. 1.1 again. Times by 1.1 again. Now we're at $948 up. We might be nearly 10 years in, but that's okay. Bang, now you're going up further and further. So if we were to times that by 0.1, you're at the stage of now where you're getting $200 every year, where you're initially only getting $100, and it builds upon itself, okay? So you get the idea. If we go to a website, they have very powerful tools in order to do this, where you just go compound interest calculator. There's plenty of them. MoneySmart.com, budgeting. Initial deposit, okay, let's say you start with $1,000. And you don't have to, but it's always good to put your foot in the door. Regular deposit every month. The real secret here is to put in, there's a special number, $500 a month. And we'll show exactly about that anyway, about why. So regular deposit, let's say you could fork out $25 per week to put in $100 total. And you're going to do that once a month, okay? So you put in $1,000 to start with, and every year you put in a total of $1,200 because it's 12 months, right? 10 years, and we're going to go 10% return rate, okay? And we'll let that execute itself and look at that wonderful graph. So the initial deposit is the dark blue, which it never moved, okay? The regular deposits is the light blue, and you can see at the start, our deposits is what makes most of the money. But as it goes through the year, as that number gets bigger and bigger and the compound interest starts to really, really build, that light blue, that top, especially over here at the 10 year mark, that light blue amount, just from nothing. You got it for free. You actually got $10,192 for free. That's insane. Now you put in 12,000, but you nearly doubled your money over the long term. Okay, so if you had $10,000 in your pocket now, but if you would have invested that 10 years ago, $10,000, it hurts. There's a lot of money there, but people can find ways to go about living without it. And coming back to the initial term we started with, act like you earn less than you do, because if you never needed that money in the first place, it could have done this. It could have gave you the massive returns as it is. And it doesn't stop there. We're at $10,192 return for free given to you just for having your money invested over 10 years. Watch this. What if we go 30? Look at that light blue. Look at that light blue. You invested $36,000 over the 30 years, right? For putting $25 away a week. It's a lot of money. $36,000. Could have bought yourself a new car with that. That would have been nice. But by doing that, you made $208,000 for doing nothing. For just living $25 a week cheaper. That to me, I'm a person that sees that and I see so much opportunity to it. Now sure, it's not going to be this perfectly smooth. The market always goes up and down. But even that, just to rule out any worry that anyone has, you're never really buying anything for cheap. There's going to be times where the market dips, and because you've set your investment to auto, $25 per week, $100 per month, just by itself, when it dips, you actually buy more shares. So it's about the volume of shares that you own in the long term, especially with the growth of the 10%. Because you'll be buying more when it dips, which means when it's up in the future, the value is growing more and more. Okay, so I'll link a video that explains that very quickly in detail. I've seen around on the internet by Woody's Game Tag. If you want to really understand that aspect of it, but don't stress about the market going up and down, because it benefits you more than if it was to just a nice steady increase. Not with the heart and the stress and the worry, but over the long term it will help you more. Now, if you've made it to this point of the video, you've probably been watching along and been like, wow, that's actually powerful. Really, really important that you start, and yes, it is. If you found any value in the video so far, I'd really appreciate that thumbs up, because it shows YouTube that, the video is somewhat beneficial, okay? So if you could do that for me, that'd be awesome. And now we're going to jump into exactly how you can go about it in detail, such as like, how do you actually invest? Like, it's all great, everyone says invest, do this, how do you actually do it? And also some other really nice benefits just to make this even more powerful. So believe it or not, one of the other benefits to this is that if you have invested and left your money in investment for more than 1 year, I think in most countries, I'm not exactly research into which one it is, but there's a long-term capital gains section. So if you were to invest this money and pull it out in 11 months, you get taxed heavier with the short-term. I think it actually is just taxed on your normal income because within a year span still. But if you were to leave it for the 10 years, or 2, or 3, or 4, anything after 1 year, I think in most countries, don't pinpoint me because this country might not do it, but generally, long-term capital gains is taxed lower. Plus, making these trades you can do through a bank account and buy any index fund, which is just a group of the reason the S&P 500 is so good is because it's 500 companies, and some will go down, some will go up, but in general they always go up, right? Generally speaking, for the last 90 years, over the long term. Well, index funds try to mimic that S&P 500 really well, but any ETFs, right? ETFs in different avenues, exchange traded funds, is a big group of companies that have very small fees, and it's just really easy to manage because it's just so simplified over the long term. And if you were to go through Vanguard, for example, and here's some of the ones I'll recommend. Vanguard, the most well-known ETF business in the world. They have so many different funds to kind of cater for anyone. They've got a growth one, they've got one that mimics S&P 500 as closely as it can. It's got ones that focus on tech, it's got ones that focus on this and that. Either way, it's just a nice big group of businesses that you can own part of and have very little fees with it. The best thing is if you buy through these specific websites, right? You go to Vanguard or you go to BlackRock. They do a lot of Australian ETFs as well. So look, BlackRock, Vanguard, you can buy from them and have no trading fee. You can put your money in, and if you were to have gone through a bank, broker, or anything else and done that, then you would have been charged the 20 USD fee or whatever it may be every time you make the trade. Okay, so you want to do this, you want to have little really to no fees at all if you can. There's a small management fee and you just got to look for that, but generally they're all pretty low. Now the one that I use, and I can happily show you guys the return over a year because it's been much better than expected, is this little business here that you're not going to be able to see. This one right here, Spaceship. Okay, so it's a little Australian brand that's been open for 2 years. Now I have invested, I'll even tell you the details right down to the nitty gritty. Now right now, this is the Sunday the 2nd of August, okay? So right now we're in a bit of a market dip, there's some weird things happening. It'll probably go up as of market open on Monday. It's a Sunday right now. But here you can see over the last 12 months, that is, oh shit. I have invested between $100 and $250 weekly, okay? This has had a performance of 36.64% return. Not 10% like the calculator we did, 36% return. And every year, once a year, you get distributions paid out. So some of the businesses that they have within this 100 that they own, called the Universe portfolio, actually pay dividends and things like that. And at the end of the year, they'll pay you. It's not much because they're not targeting that. They're targeting growth over the long term, but it still helps nonetheless. And you get that dividend and you reinvest it because it's not $50 or $100 or $200 it is at that time, and you can go and spend it on a new handbag or some shoes, sure. But if you invest that, what's $200 on that calculator over 30 years? It's no longer $200, it's going to be in the thousands. So just keep investing. Long term is key. But either way, so I've invested $7,603 total. When I first started purchasing into this business, and the share price of this particular portfolio was at $1, $15, $14, around that mark. Now they're trading at $1.63, okay? Now, could this grow to $3, $4, $5 a share? Who knows how far it could grow. Vanguard ones are operating in the 200, whatever. The more people that buy into it, the more that it rises, okay? So, $7,603 total, and right now the total amount I'm sitting on right now that I could withdraw at any second that I want is $9,635, which means by investing $7,000 for the year, we'll just use a nice flat number, I've nearly received $2,000 in return. So you tell me something that you can put $7,000 into, real estate can work like this sometimes, and you'll get $2,000 back. That is incredible return. Like I said, it's around the 30% mark, a bit higher at the moment. It's been as high as 50% nearly. COVID is really influencing things a lot though. But I hope this helped you guys out in one way or another. Remember, the secret to building wealth is to act like you earn less than you do, which is great. Just as baseline, you're gonna have a bit of extra money to spend, but if you invest that money, you're gonna see massive, massive returns. And the secret is into ETFs. There's never been a better time to invest. Exchange traded funds have only really taken off this last half decade to a decade. It's just like people have realized how powerful they are now. It's kind of a new thing not that long ago. So right now, awesome time to invest. And remember, there's another saying, so many sayings in this videos. The best time to invest was 30, 40, 50, 60 years ago, because compound interest would have been worth so much more now. The second best time to invest is right now. Never try and time the market. Thanks for watching, guys. Be sure to like the video. If you did, I'd really appreciate it, because it's hard to grow small channels like this with big channels just conquering YouTube. And subscribe if you want to see more financial related videos. Alright, we'll see you guys next time.